The mention of promoter after, I couldn't help but think of Mark Twain coining, a mine is a hole in the ground with a liar standing on top. And I think moving forward here, we need to make sure we do things right. And there's a big reason why a lot of investors are on the sidelines. Lots of risks, technology risks, sovereign risk, jurisdiction. What I can say is Frontier Lithium, we got started in 2010. We've always had the view that this is going to take time, and we need to crawl before we walk and walk before we run, based on a lot of the uncertainties. Really got my blood flowing here this last discussion. So very basic terms, I've only got 12 minutes. This is going to be a whirlwind. I've got to leave after this, but my colleague and I are here all day tomorrow, so open to conversations. Quality is king. And based on all of the uncertainties, what we have here at Frontier is spodumene. It's a hard rock asset located in Canada. We think this is a huge Commonwealth opportunity that is a unique story. So we want to say, first of all, thanks for inviting us. Much appreciated. So this spodumene in particular, notice, is very white, very low iron. These are really hard to find. Not only can this material be used for downstream production of lithium compounds, but our focus in the short term is to produce, firstly, concentrates for industrial users, i.e. Corning, Schott, those that make the best glass in the world. So essentially, it's like a 2-for-1 deal. We think this is a great way to hedge a lot of the risks that we've touched upon earlier on. Walk before we run. Located in Ontario, northwestern Ontario, we have about 150 kilometers as the crow flies north of Red Lake. We are working on what's becoming an emerging premium lithium metal jurisdiction in North America. Again, this low iron aspect, high grade. This is what we're working on statistically is an outlier, very difficult to find. It's assets like this that are going to supply for many, many years to come. We have an asset, a PAC deposit. It's 2% grade. So that's right there with the Greenbushes deposit. Greenbushes supplies roughly 35% of the world's lithium. And, think of a deposit model. We think of the old ways. We're a little bit old school. What's supplied the market to date? And can we find something like that? Keep it simple. That's what this is. Low impurities, we have iron levels, less than 0.1% iron oxide. Really, really hard to find. Very, very low. We put some material through the world's largest ceramic glass plant in Europe about 1.5 years ago to qualify the spodumene from our asset. So we are being referred to now, the analysts are starting to pick up on our story as the highest quality asset in North America. So we have ambitions, to produce lithium compounds, but our entrance into the market, we think there's going to be very few companies that can actually become players. Our entrance is, again, to satisfy a market that is supplied essentially from one source. Already pressed for time. Walk before we run. So we start on producing concentrates. What we do know is if you want to participate in downstream and produce compounds, one thing that we know from our experience is that mines build chemical plants, not the other way around. So focus firstly on producing premium concentrates, and then with time, as we de-risk, we can judge the market accordingly based on the true demand and enter into the market with the least amount of risk for our shareholders. Lots of mining, from everything from grassroots greenfields exploration to mine production. Managed to leverage our assets to bring in 2 experts. One, Mike Tamlin, COO of Neo Metals. He spent his life at the Greenbushes deposit working for Sons of Gwalia, developed the technical grade market in China for the glass makers there. And Peter Vanstone worked his whole career in lithium in neighboring province of Manitoba. Frontier's a small company, $50 million market cap, about 160 million shares out. Its management has over 30%. My family in particular is the largest shareholder. We maintain a roughly 20% position in the company. No large institutions in the company to date. We continue to raise money as needed. So basically since 2013, we've invested about $12 million into the project, roughly $2 million a year. Greatly undervalued when we compare to some of the acquisitions that have taken place in Europe or in Australia. Really low value. We're just at the point we're just starting to tell our story now. Science first, business second. We have done a poor job on, the market has not differentiated this low iron aspect compared to our peers in Australia. So my job here over the next year or so is to start telling this story and show a different avenue for participation or a different vehicle to step into the space. Very quickly, again, 40% of the world's lithium comes from essentially one mine in Australia. We all know about the brines. We think the future is hard rock, considering just-in-time logistics for inventory systems, and the trend towards needing more of this hydroxide everyone's talking about. The reality is it's cheaper to produce hydroxide from hard rock. The brines have to convert everything from carbonate first at an extra $1,000 to $1,200 a ton. We focus in particular that all the glass makers for the industrial users are supplied again, essentially from one mine at the Greenbushes. Some clusters of assets, Ontario, Quebec is a great place that we plan on future supply spanning into Europe and taking care of North America. Very quickly, the pack, we're there, we're an anomaly, we're there on grade, we're working on resource size right now. In fact, by Christmas, we think we'll double the resource size of the project. And we have a new area that we haven't even looked at with other spodumene showings. So again, this is what we think is becoming the Greenbushes of North America. One point I'd like to add here is as the prices have softened for the feedstock or raw materials from the chemical grade spodumene sources, we see basically a 2 to 3 time multiple in pricing for our concentrates compared to the dirtier concentrates to feed the chemical plants essentially in China. So we think that's a great place to get started with. Our competitor essentially is carbonate. So if we price just on a per lithium unit basis at a slight discount to carbonate, that's a very nice sweet spot for us to operate. And the industrial users are really motivated because they like the free silica atoms as well in our product. Well, I got 6 minutes left here apparently. So the assets, I'll dive in a little bit on that. In part, we have some challenges on the project. One of the biggest challenges is its location. We have 3 month out of year winter road that we utilize on the project. The big infrastructure is coming. In fact, I signed paperwork last Friday to hand over the surface rights for a big power line to be put right over our project by 2021. So again, another rationale for walk before we run, de-risk everything, ready for the scale up. We have focused on the PAC deposit. We put out a PFS last spring. There's roughly 10 million tons of 2%. You're not going to find that grade in too many places. especially in the West. Again, this low iron aspect, you're looking at a picture of the surface. It's outcropped at surface. The true average width is about 65 meters wide. It's standing straight up from a mining perspective. It's as good as you get. That zone you're looking at is about 4.5% material, and it's up to 30 meters wide right at surface. These things are really, really tough to find. This is what it takes to develop a new mine, is an asset like this. It takes time. The market's going to take time. We've taken our time. We've done things right. We've done our homework, and we understand what we have and how it fits into the world and how it's a low-risk proposition. The PFS, there's a couple $2 billion basically of revenue potential, of mostly technical grade. One thing I'd like to highlight about that Greenbushes deposit is they have a pocket of low iron spodumene. In fact, that's how the Greenbushes operation started. It was around producing concentrates for industrial users. Post-tax MPV, $300 million. We used an 8% discount rate. It was a small mill. We looked at the infrastructure challenge that I mentioned, and I was comfortable with an 1,100 ton a day mill. It's a small mill, produce about 80,000 tons of concentrate a year, and that we can pull off with the current infrastructure. It was $140 million capex. So what's the benchmark? Again, referencing the Greenbushes, we have the grade, we have the widths, we've got all low iron, we have a favorable mining jurisdiction. This is a world-class asset. We've been compared to the big tonnage, low-grade, dirty deposits in Australia. The tonnage we're working on. When you talk to a Lithium insider, they consider this a world-class project. But said, look, we need another 5 million tons. The benchmark is 20,000 tons LCE a year for 20 years. So we started to explore beyond our deposit, and almost embarrassed to say, about 2.2 kilometers away, we found another showing of pegmatite, which by Christmas will be a resource. At surface, it's double the size of the Pack deposit. We did an initial drill program last winter. In about a month or so, we'll be back in for phase 2, at which time we'll put a resource on it. 215 meters of 1.5%, 1.4% lithium oxide. So this is about 22 kilometers up what we call the Electric Avenue. We just confirmed an old government showing and found another blowout of about 4.5% material. The iron levels were below detection. We have not done really any exploration at all in between these things. So the upside is huge for tonnage. By Christmas, we have enough. It's time for development. So what's the strategy in my finishing minute here? Mines build chemical plants, not the other way around. Produce concentrates. Focus on technical grade. It's a smaller market. The margins are big. And there's only one supplier. That's a great place where we're going to be treated well by some big players that have been in business for hundreds of years. That's where we like to focus on to get started. We have announced we're just in the midst of our engineering on a phase 1 demonstration plant. Rather than build the PFS scale, the infrastructure is coming. So let's de-risk this. Let's take care of some glass makers first, and then we can time things accordingly. Small plant, US, about $30 million investment. That's my plug number right now. Produce concentrates for, again, the premium glass makers. It allows us to figure out what we need to be when we grow up. We are in the lab, in conclusion here. We've inked a deal with XPS. It's a subsidiary. It's a Glencore company. It's their lab in Falconbridge or Sudbury, Ontario. We're taking some of our premium concentrates And we're converting them to lithium hydroxide as we speak. We feel in about 10, 12 months from now, we'll be ready to start piloting that. So we think there's a potential good partner in the background when we get into the conversion days, because our focus and our strength right now is build a mine, produce premium concentrates, and where a chemical plant is using ground beef, we have Angus beef, but when you grind it up and turn it into hamburger, it'll be the best hamburger you ever have. And this market is based on quality. So that's where we're putting our money. Happy to tell you the story. Taking our time, a lot of uncertainties. We think all of these things combined, we should be in really good shape to build a mine that will supply and be a real participant and not controlled by the oligarchy out there. So that's my story. Thanks very much. I've got a bolt here right now, but we're here all day tomorrow. So welcome any conversations. Please see our website if you'd like to see this presentation. Thanks so much. Sorry I ran about a minute too long. My apologies. Have a great day. Thank you.